Welcome to this YouTube channel. In this video we are going to talk about top 10 tax saving tips. So before starting this video, like this video and subscribe to our YouTube channel for future updates. Entrepreneurs and business owners are responsible for paying income tax on the profits they make. This can be a significant sum, therefore they are constantly looking for deductions and exemptions to reduce their tax liability. One of the most difficult concepts to grasp is income tax. The following are the top 10 best tax-saving tips. Number 10. Hire your own family members and relatives. If you're considering putting your child or spouse on the payroll, keep in mind that the IRS will pay close attention to how your company is run and is more likely to audit it. Employing your child or other family members may be a clever way to take advantage of any tax savings available. However, you must ensure that they are genuine employees. You may find yourself in hot water with the Internal Revenue Service if you are simply attempting to decrease your tax burden without really giving verification of hours worked and activities accomplished. Another crucial consideration when hiring your child to work for a family business is that all applicable child labor laws must be followed. Parents who bring their children into the family business are not given special treatment. Whether you hire your spouse or your child, you are bringing them into a vital part of your life and the family's basis. You can instill in your children the value of a strong work ethic, as well as show them the benefits and drawbacks of self-employment. When it comes time to choose a job route, this may assist them in deciding which direction they want to follow. Children of self-employed parents are more likely to believe in their own abilities or, in some situations, to follow in their parents' footsteps as successors to the family firm. Number 9. Traveling and accommodation. It is rather usual for people to travel for business. If a business has branches in multiple cities, this is done more extensively. If you want to save money on taxes, book your travel tickets and accommodations on the company's behalf, rather than from your own account starting the next time you go. This is a legitimate business expense that can be deducted from the company's taxable income. Number 8. Increase marketing spending. If you're still utilizing traditional marketing methods, it's time to switch to digital marketing, which allows you to reach out to more potential clients and so increase your chances of finding new customers. This will also save you money in the long run because marketing expenses are tax deductible. As a result, increasing the marketing budget is a good idea. Many of the same tax benefits as an IRA are available through an employer-sponsored 401k plan, plus a few more. A standard 401k allows you to defer pre-tax money from your salary, lowering your taxes this year. Any earnings, whether capital gains or dividends, will be able to be deferred. After you reach the age of 59-12, you'll have to pay taxes on any withdrawals from the account. You can effectively defer investing returns for decades while working. Investment income is taxed differently from wage income, and this is especially true when it comes to capital gains. Long-term capital gains are taxed at 15%, 20%, and 0%, respectively, by the IRS. 0% to be exact. However, you must strictly adhere to the guidelines. Short-term capital gains, which are taxed at the ordinary income rate, are usually taxed at a lower rate. However, if you retain your investment for more than a year, another perk of being a buy and hold investor, you'll be able to benefit from long-term rates, which are likely to be lower. Number 7. Business utilities. Such charges can be claimed as utility expenses by business owners who use their automobiles and phones. For example, spending on phones, vehicles, parking fees, and drivers' salaries are all claimable if they are used solely for business purposes. If you own and operate a home, you can deduct your electricity costs. This will aid in the reduction of tax burdens. Here are some examples of corporate utility expenses that can be deducted. Expenses in advance. Section 35D of the Income Tax Act allows you to deduct all expenses incurred prior to the start of your business. For 5 years, these are reported as preliminary expenses and are deductible from taxable income. Expenses for convenience. If you frequently use vehicles and phones for work purposes, these costs can be deducted as business expenses on your tax return. Recurring costs. If you run your business from your home, you can deduct your power costs as a business expense. Additionally, you can deduct expenses related to your internet connection as well as your rent. Depreciation of all capital expenses is also deductible under the Income of Firms section of the tax code. To lower your tax liability, you must make capital expenditures from the company's account and claim depreciation. Number 6. Medical insurance. Medical insurance premiums up to $143 can be claimed as a tax deductible under Section 80D of the Income Tax Act of 1961. This can include your spouse, children, and parents. This does not apply if you are running a business while also working full-time at a job that provides medical insurance. Number 5. Correctly deduct tax at source. The Income Tax Act contains particular provisions that allow entrepreneurs who purchase a service or product to deduct tax at source when making payments to the vendor. If a person fails to do so, the expenses will not be deductible, resulting in an additional tax burden. For example, if you pay a commission to an agent in the amount of $1,720 and fail to deduct the tax at the rate of 10%, the entire amount of $1,720 will be disallowed when calculating the taxable profit. Number 4. Donation. Donating money not only provides you with the gratification of doing a good deed, but it also provides you with tax benefits. You must donate to recognized organizations and funds, such as PM's Relief Fund, to avoid paying taxes on your donations. You can also claim tax benefits by donating to a recognized political party. There are a variety of ways that can help you maximize your philanthropic contributions while lowering your tax bill. To maximize tax deductions, high-income individuals should donate low-cost basis stock, contribute to a donor-advised fund, or stack future philanthropic donations in a single year. Number 3. Housing loan. If you feel that buying a house with a bank loan is not advantageous, you are mistaken. It is a long-term investment that can appreciate greatly over time and offers tax advantages. If you have linked your PAN with the company, you can claim tax deductions of up to $860 each year under Section 80C of the Income Tax Act. Number 2. Depreciation. Manufacturing companies are eligible for significant tax breaks. Companies that install new equipment and machinery throughout a year can claim up to 20% additional depreciation on top of the ordinary depreciation in the year they were put in use, under Section 35AD. If you bought new machinery and claimed conventional depreciation of 15%, but not enhanced depreciation of 20%, you'll have to pay taxes on the 20% you didn't claim. Number 1. Digital transactions. It's not a good idea to pay your employees in cash in this day and age when everything is done online. Furthermore, you will be placed on the Income Tax Department's red list. If you pay an individual in cash for more than $114 in a single transaction, your account books will not allow it. It's easier to keep track of your payments, transactions, and sales when they're not on paper. You may pull up any transaction from your online database from any time period, and forget about keeping files and looking for them when you need them. Online transactions are far more convenient and secure. You won't have to wait for your consumer to obtain you money, which you would have to do by standing in lengthy lines in front of ATMs for days. What do you think about this video? Do let us know down in the comments section below. If you enjoyed this video and want to hear from us again, be sure to hit that subscribe button before you go.